We are joined once again by a very special guest, a very special friend, Mr. Fibbo Swanny. Many of you already know him. He has been on this channel now for about, I don't know, many years, 2, 3, maybe even 4 years.
It could be 4.
Might even be 4 at this point, going over a very long-term analysis. We've had this thread of analysis now with Swanny that has been spanning pretty much this whole bull market, and he has been hitting these insane targets very, very, very far out in probably the best way that I've seen anyone ever do it ever. It's actually insane. I've never seen someone as good with the long term as Mr. Swanny. So you know what? I'm going to hand it off to you here, sir, and you will go through your long term look. Of course, all of Swanny's links will be in the description below as well. And take it away.
All right, let's flip out to the. We'll start out with the. I'm only going with Bitcoin this morning, and mainly going to be looking at macro looks and getting that long term. But I'm going to start out with the daily here, just to kind of show you where we're at and what I'm looking at. We went in, when we talk about the bull and bear zones that I look at, we went into the bull zone the other day. When I say the other day, it was what Sunday, August 10th. We went back into the bull zone, so we had another buy. With targets, the next target up here is right around 127. And then as it went up and made a new high and came back down, I bought the shallow fib again. So I got 2 buys in here, and that's why I got 2 targets. So right now, I really wanted to start with this to kind of show you that with the daily going back into the bullish structure here, or it never really changed. I mean, it went into the bear zone here for a second, but it really didn't do much. And then went right back into the bullish zone, and the ADX is above 20. So you got some momentum that's still with the bulls, even though we had this large red candle yesterday. It's still finding some good buying interest on dips. So I like the bullish zone that we're in. So I just going to start with that and kind of go into the longer time frames. Now I got a bunch of different.
I'm gonna have a premonition here that the biggest question many people are going to ask in the short term is, do you think the low is in on this move then?
The low is in, as in where?
As in yesterday, the bottom of yesterday's dump.
Not necessarily. I still think we could actually come back down. Like if I looked at my 4-hour here, my 4-hour did click a little bit of bear. And what I did here was the momentum kind of sucked when it happened. So what I did, if I move the line over here, the low was right there at 117.2. And since it went into the bear zone and it's underneath the previous shallow fib, it is actually a sell to get out of the longs that I have on a 4-hour. But what I did instead with the low momentum is I just set a stop just under the previous low there at 117.2, which didn't hit yesterday. It tried, but it didn't hit. But I have to respect the bear zone in the short term. So this target down here, if I get stopped out, is down there right around 112. And that's key. So in the real near term, could it dump back down to 112 before heading higher? I think so. And that's why I got to stop in here, and you got to have risk management, to let you know, hey, it could go a little bit lower. But what I'm looking at is if it drops down to this 112, if you look at my daily, 112, 150 right here keeps, you can go all the way down to 112 and still be roughly in the bull zone. So, it's a dip that could happen, but overall, I think the low right at this 111 looks a lot, of a higher probability of holding at this point in time, based on the daily going bull and holding on the dip yesterday and those kind of things. So yeah, I could see it going down a little bit, but then again, you could just capture some more buys down there before heading higher. But then we'll go into the weekly. I'm going to go to other charts, but I just wanted to show you on here what I've been watching on the weekly here. And the support zone here. Once we made this new high above 69K, we went up to this 83 to 91K zone and then popped up and came back down. And then I was looking for 3 consecutive settlements. I know you can't see it, but it's tight right in here. But it did hold and didn't have 3 consecutive settles. It tried, but then with this support holding, the target was going to be that the 200% extension, which hit the other day, and then of course we got even higher, a couple of days ago. So that target hit. So if you're looking at this one with this nice move to the upside, that hit. So What I saw a bunch of people talking yesterday about this pattern over here looking just like this pattern.
I've seen a lot of people with that too. That's very interesting. Yeah.
I don't get it, but I mean, I guess it could be. But the reason that I don't is because these highs right here held, but these highs here broke, and we had 3 settles above it. So to me, I want to get the fib extension on this, and the extension right now is between 118 and 123, 123.8, which almost, went to 124.533 as a high, but this is a fib extension zone off this high, so it could drop back down to these lows, and that's where that 112 kind of comes into play right here. But if it gets above this 123, I can think 144, 295 would be that next level above that. If we can get above this 124 and get some settles above it. So I just want to kind of show on this weekly that, we stayed in the bull zone on the way down on every one of these dips, and everything is still structurally bullish on this. So let's go into a little deeper and start looking at some of these other charts. Now, a lot of people, the main question that I keep getting asked is the 209 as a minimum target for a high still in play? The answer is absolutely still in play. And then the other question I get is the 4-year cycle broken or not? To be honest, I don't really have a freaking clue. But I do have a couple red flags that says, yes, the 4-year cycle could break and we could be in an extended push into this cycle, and maybe we get a high in 2026 instead of getting that high at the end of this year and then starting to break down. And there's 2 reasons for that. And on this chart, I'm showing what I'm showing here. I got these little circles on here to show when the new high was made or a new high is made, and these vertical lines are the halvings. So when you look at this here, you can see, right, this is the point where we broke this previous high over here. Now let me move that back. That was weird. Like over here, this high right here, this is where it broke, and then so forth, and then broke there. But the thing is we had a high here prior to the halving. All these other ones were after the halving. So this right here kind of broke the structure that we kind of saw, since the beginning, because we always had these highs and we didn't break the new high until after the halving. And they weren't even close, like we weren't even close to breaking the high, wasn't even close to breaking high, but this one already broke the high here. So that's the first. It's not like I'd mortgage my house or anything and put everything into it because it did that, but at least it's that first red flag that the structure could be a little different at this point in time. So what I was looking at here was I was looking at the trend line here that broke down. I know this is a mess in here, but I can blow these up and just kind of show you what I'm looking at. Let me pull this over. I'm looking at 2 different fibs here. One, the black fibs here is just from the break point up to that high. What I was looking for is when the 61.8% level breaks and gets 3 settles under it, that becomes a bearish signal. And we also broke this trend line. So you look at the blue fibs, and what I want to do is from the high down to this low, and this dotted line is where the trend line break was. So what I was looking at here was I wanted to see if the 38.2% level would hold on the retest on the upside, because that would be resistance to keep the trend going to the downside. Mm-hmm. So I'm using the fibs from the breakout here, broke the 61.8% in the trend line, and then we worked our way down and tested the 233 is what I have on this one at the moment. So if you go over to the next one, same kind of thing. You take the fibs from the break point, the 61.8% level broke right here, broke the trend line, and then worked its way down. But this one, the 38.2% level was up a little higher, which didn't even get close. But this one had a trend line that caught the resistance a little early, because back here it was like the trend line was the slope on it was a lot different. And then we go to the next one over here and take this one, and the 61.8% level and trend line broke there and worked our way down and got well under the 233 there. So when you go to this one, when you start it from the break point, I don't have anything to start from this one because we got a high prior, it broke the pattern basically is what. So that cycle that everyone's kind of talking about looks a little different this time around.
Oh, for sure.
Yeah, so I don't really have any way of doing that, but I do have a trend line from the bottom that we're watching, and that's going to be a key support guide as we go forward. Going forward into the future.
I think also to your point, I don't mean to stop you there, but something I've been saying on my channel and during interviews is that what's also just structurally different about this cycle is that once Bitcoin has actually made a new all-time high, we've seen these 5, 6, 7 month long consolidations, which just has not happened before. Bitcoin's just been on a parabolic run after breaking the prior high, and then it's done basically.
Yep.
But
it's very stair-step-ish. It's very nice and up and sideways. Good. Oh no, it's actually a sign of a maturing market. Right. It is. And I think that's where we're kind of getting to. So it could be just a steady climb, which I think that's what's going to happen. And that's why I put these two trend lines here. All I did was
to that point, speaking more about your 209 target, it could very well be, at least in my opinion, maybe we get like a 6-7 month long consolidation relatively soon. And then you see something like that happen. That could be the launch pad for something like that.
Yep, exactly. No, I'm with you on that. So I didn't really have a way to kind of show where this is. So what I did was I just took the trend line underneath here and then just cloned it to take the high there just to kind of give us a guide. But that's the one reason right there is reason number one. Now, the second reason is on this chart here, I took the trend line breaks and then I looked at the break to the high. And on this case, this is on a 21 day, and it shows 18 bars to the high. And then I didn't put the arrows on here, but just same thing here. You take the breakout and it got 18 bars to the high. You take the furthest point underneath the trend line to the trend line itself. It hits the 361% level here. It actually extended further, in 17. And that before it started to correct back. Then on this trend line, again, we had 18 bars to the high off of the break here. And then the distance underneath was a nice move right to the 361 there. So another reason I think it's different, because if you take this over and take 18 bars from where the break is, we're already past it. It should have already hit and been done and started to work our way back down to the downside because that's just been to me, that's kind of that 4-year cycle that they're talking about is what's happening post halving every time. And this time it's going beyond that point. So that's the second red flag that says, hey, the 4-year cycle could be different or broken to where, the high that we're expecting at the end of this year. And my minimum was the 209. It could be extended. Maybe you see the 209 in the first quarter or into 2026 or anything like that. So I just wanted to show that was busted there. And the other thing was every time, and I've said this before, and you'll see it on some of the charts. Every time the 361 hits, even if no matter what time frame you look at, and you go all the way back down to the beginning, and you take any big correction, when I'm saying like that, anything like 20 to 30% or even more, the 361 hits after the trend line breaks. So if you take the distance from this one where we're at today and take that distance, it matches right up pretty close to the 209, which I like. I just like when you hit the pattern.
I like it as well. I'm holding.
So the other thing is like I think it was this one. Yeah, right here on the weekly. If we broke this area, we get up to this 144. So that's what this line is right here. I just put the 144 in there because it could be something that we get up to that point and then we come back down to the trend line. If the trend line's right around the, I think the trend line would be, if you went up to that point and came back down, it's going to be right around the 95-ish area. I think if it went down to, I think it's right around 95. It's hard to tell on the chart.
Into one sentence, that's kind of like worst case scenarios correction from here.
Correct. And if you look at the weekly can go all the way down to 91.4 and still maintain bullish structure. Right. So if we did have a much larger correction back down to 95, it'd be a good buying opportunity to still hold the bullish structure and still have the 209 and even higher later on into 25 and 26 as targets. So, but then again, that's where the risk management comes in, and that's where you watch the daily, because if the daily breaks the 112, that could be a sign that it's going to go to that 95 or so. So we'll have to watch that. So those are I just wanted to answer that question or two questions about the 4-year cycle being broken. I really don't know, because there's just not enough data for me for what I do to give me that comfort. But I do have two good reasons that I think it has. So so it's not it's not gospel, but it's it's something that I'm looking at and thinking that it broke. And then is the 209 still in play? And then according to this, absolutely, because this trend line right here is going to be our support guide. And if this trend line breaks to the downside, then we're in trouble. So let's go on to this is kind of a little work in progress area. So I'm going to be moving around a lot here, but I put in some trend lines here because I know a lot of people hate diagonals and trend lines, but they work really well for me. I've done well with them. But I use them as measuring sticks pretty much. So if you take these different trend lines I have on this one, and we're looking at the 8-day here, it's pretty much a weekly. So if I take some arrows in here and start with the red trend line here, and I just want to do this because I want to show you how much of a nice pattern we have going. And as long as this pattern keeps happening the way it's happening, I don't have any problem waiting for that 209. So if you take the red trend line here and you go to the furthest point underneath and you take that distance right here, and I'm going to rough it in, but then you go to the break point of that, you can see that it went right to the 61.8% level right here and tested. So if you were looking at this, it would be a nice move to this point, and then it came down, and then we broke, and then it kind of retested back here and then kept going. So there's that one. And then if you go to this black trend line right here, so if you go to the furthest point underneath this one right here and kind of rough it in to this point, and then take that same distance, that brings you up to these highs right here that hit really nice. And then it came back down and retested right there. And I think that's what you're kind of talking about, Crown, when you're talking the stair stepping that we're seeing. So the break of each one of these trend lines are giving us a nice support and resistance flip on each one of these targets, which is good. And then also this is where that held without the 3 settles underneath, and then we went higher on those extensions. And then the other one would be the arrow going the other way, just for shits and giggles. If you look at this down here and take this one going the other direction, you can see that matches really nicely at the low. So I like looking at these as measuring sticks to kind of give me a sign that the support and resistance levels that are in the pattern there are finding buyers and sellers at the right spot. Now, the other thing with this, and I'm gonna let me get that out of there. I accidentally let's blow this up a little bit. I want to show you kind of how I look at things when it comes to looking for the trend line breaks. Now, you're going to hear me say a shallow fib all the time, and that's just the 38.2% level. If that holds to me, that on a correction to the downside, that's just a good spot to say, hey, we're headed higher, and usually at a pretty good pace. So if I bring some fibs into this and start here at the bottom, and you start here and you go up to this one right here, you can see this one actually held the 61.8% level right here at 16 and some change. And then what I'm going to do, I could do two different things. I could just go up to the next high right here, and you can see the 38.2% level at 21.5. It did wick down, but it wicked down to touch the trend line, which was really nice. And then it popped back up. So it held that area. And then if I keep pulling them up every time it makes a high, it comes back down and tests the 38.2. And then it made another little slight high right there and then tested it again. So if you're actually doing this, and this is what I kind of do in my group, is every time it dipped, we're buying on the way up until it breaks. And then you just kind of use that as your guide. So if you keep moving to the upside here to the next one, you can see this one came down and did not even get close. So that right there is a nice bullish signal because it didn't even get to the 38.2, and you can see this one launched And then this is where we launched up, came back down and retested right here. And this area became really good support. And then you work your way up to this one. And as you can see, it came back down and hit the 38.2% level before heading higher. And then you can move it up to the next one up here. Whoop, right there. And it got really close.
Beautiful.
It held. So now if you move it up to this point right here, I mean, we're looking at 82.7 before it even gets there. So
yeah,
I don't even think that's going to happen just yet, because we broke this high right here, and this is where those extensions came in. When you put this in, it hit the fib extension between the 127 and the 141, which is that first line of defense that I always kind of look at to see if it's going to be a reversal. And since it kind of hit right there, and you go back to the 4 hour going into the bear zone, we could drop it back down to that 109-ish area, or close, like what was it, the 112? It could drop down to the 112, maybe wick down to the 109, come back up before heading higher. But since it broke this high, that's why I don't think the move all the way down to the 38.2 is going to be in play.
If you were to just kind of anticipate the next high was maybe, let's say, around 145-ish region, where would that 38.2 level come in around?
Yep, exactly. That's where I was headed. You're a smart man.
Okay.
If I roughed it in there, it would be at that 95.
Okay.
Which is right there. Which if you follow that weekly, now the weekly is probably going to be up a little higher than that, because right now it's at 91. So if that goes up to the 144, then maybe this level gets around that 95. So if we can get up to that 144, and I can see that happening, getting up to that 144, then we get a nice correction to the downside, and then start heading higher from there. I could totally see that. And the reason for that is, let me go back to this chart. The other thing is, I had this over here as a little reminder. When you start looking at some of these corrections, the corrections lower is a lot of them are, some of them are around 20, some are around 30 or so, but there's a couple of them that are around 30, 33, somewhere right around there. And if you put this on here from the 144 down to this area, it's right around that 30-ish to 33 level. Yeah. So I could see us getting up to that point and having a nice correction, and everybody's going to be like, the sky is falling, we're all going to die, that kind of thing. And we go from the 144 down to there, and then we can head higher. I don't know, but that's the pattern that's kind of happening so far. And I'm just going to kind of keep an eye on that.
Fast forward another 5-6 months.
Exactly. So I mean, people can go in there and do their own thing here, where you can kind of take the high and go down to the low. Like this one was 21. You can look at every one of them and see there's a couple 30%ers in there. So maybe we get another 30%er if it gets up to that 144 or so. So that's something I wanted to kind of show there on that one. Now going on to this next one, there's a lot on this chart, but the main thing I was looking at here is just, I'm looking for confluence of a lot of different things. And so far everything's working, but working way back here, when you break the 100%, the 361% or 3.618, hit really nicely right there. And this is just going to show that there's different ones in here, but the 361 up here is where that 209 comes from. Mm-hmm. But I was looking at, this kind of comes back to the stair stepping that we were talking about earlier. I put in those trend line breaks that we just looked at on here. And that's why I did it on a different chart, because this one gets messy. But I like the confluence of this 61.8% right here and the trend line break on this dotted line. And then you look at these extensions off of this high of 74 to 79 here. And if you come across here, that's where some of these highs are. And then it came back down and retested. And then you held this 127 and it went up to the 200% right here. It went a little bit higher, but if you draw this across, this 101 area could be another area of support along with this. And then I look at a bunch of different ones. So you're looking at this one, the 122.521 already hit, and it hit inside this zone here, and that's where the 144 comes into play. But if this low here at 111 holds, which I think it should, the way things are kind of holding here with the buying interest that's coming in on the dips, And yeah, we could break down to that point on the 4-hour like we talked earlier. But if this holds this latest leg and then a little bit of a dip and then back up, you get the 61.8% level that matches really nicely. Then it goes to 160, and then the extension goes into the 300% here, and then the 200% off of this structure here matches up really nicely with the 361. So I'm really just kind of looking for the different really strong horizontal support and resistance based on the Fibonacci levels. And that's what I was looking there. And the other thing I have on here are these vertical lines that it's the 21 EMA against the 55. So whenever the 21 dips down below and then back up, you can see bearish and then it goes bullish, on each one of these breaks. And then once this one broke and went way up, it didn't break until here. And that kind of goes with the break of which one was this? Whatever chart it had on some of the break of these trend lines. I can't remember what chart it was, but but I'm looking at these crossovers here to give us a lot more of a bearish picture. And as you can see right now, we're still well above
nice
the average here, and everything's still increasing on a week over week basis. So right now, everything's still structurally bullish there too. So I just want to kind of just show, kind of my brain and what I look at with all the fibs and the confluence and all those kind of things. And all of this is really just some extra stuff to give me confidence that I'm okay being long and buying into certain dips. And then on this one, I was just showing, this is the one I showed last time we were in here or last time we talked.
Mm-hmm.
And this was, I'm not going to go through all this, but the whole thing was from the halving to the high was 92, and this one was 111. And so on this latest one, if you did 92 and 111, you're somewhere between July, which is not going to happen because we're already past it, and the other one was at the end of the year. So the end of the year is still a timing like this one was to where we could possibly get to that 209. And then people will ask, well, that seems really far away. But then when you look at this chart here, what I did was I took the low from the once it broke the extension up to the 3618 was 159%. So if we did the 127 here at the 83, once we broke that and held right there like we looked at before, if you go up 150, I just did 150 up to this. So if this went 159, then why in the hell can't we just do 150 here? It doesn't. I mean, what's the difference? I mean, it's we had a nice little run up right here, and the way things are happening today, I don't understand why we couldn't get toward the end of the year on a move to 209, because a lot of people are like, man, 209 seems really far away. But when you look at history on things when they break their fib levels on some of these extensions, the 150% really, it's a lot. Don't get me wrong, and it would be awesome if it happens, but it's not out of the realm of possibilities. The probability, especially the way we're stair stepping up and hitting certain support levels, and they're holding on dips with the buying interest on each one, that structure right there gives a lot more probability that the 209 could hit. And of course, I mean, not to say that everything's going to be perfect and it's going to go to 209 because it hit the 3.618 every time since the beginning. There can be a breakdown. So don't go out and mortgage your house and buy everything just because it looks like it's going to 209.
Too late.
But the main thing is watch these structures. So if it starts to break that 38.2% level, which it's never done all the way up, that could be your first signal to say, okay, maybe I need to reduce some exposure, or take some profit or whatever's in your plan of what you're looking at there, and just use some risk management. But as long as it wants to hold the pattern, I don't see any reason why 209 can't hit. And then lastly, I just put this chart on here. This kind of comes from this one here, this kind of channel that we're looking at. All I did here was just looking for different price levels. Like this is supposed to be 209, but it's right around 211. But it should be right around 209. And this one right here is at the end of the year. So if it goes up to the end of the year, it would be 209. If it gets extended out to the first quarter, it could be right around 250. And if it wants to go all the way to the end of next year, it could be up at that 388. If it wants to keep going. I mean, who knows? I mean,
I know. Just having a laugh.
Yeah, no, it's funny, but I mean, if you're following this channel and if it wants to get up that high, like you said, we can get up to the 144, come back down, then go up, and then it can come back down again, and we could be in this channel for a while, and just kind of, and that's really what I was kind of looking at there. But I think if you look at the 300, I think I have it on. I think if you kind of look at, where did I have that at? Can't remember. Oh well. Oh yeah. The trend line breaks. Yeah, if you do this one, I mean, this is kind of interesting too. When you broke this high right here, and we got these extensions. Another thing you can do, and I haven't went back and tested this yet. I'd have to go back and look. If you take the furthest point underneath this all the way up to this point, because if you took a horizontal line here that broke and held, and you take that distance and you clone it from that point on the break, since we broke right here and held, and we're on kind of this new run to the upside, that's where 310 comes into play. So when you're looking at this, maybe this comes in at like 310 or whatever, and you bring it down to around that 310, whatever the hell that is, right around there, and then move this over. Then you're probably looking at September of next year before we get to 310, that kind of thing. So it's still a possibility. Is the probability really high for that level? Probably not. I think the probability is a lot higher to get to that minimum of at least 209. But again, if we do get to the 209, we do have like it did here. It got to the 3618 and it had an extra little bump to the upside. That could happen this time around too, especially with the whole different world we're living in with paper Bitcoin all over the freaking place, and everybody and their brothers in it now. So you never know. But that's all I got, dude. Just kind of going through what I was looking at.
That was amazing. I just kind of want to summarize it for people watching, just to make sure that I got it right, and then hopefully can help other people out there as well. So to kind of follow the whole thread of analysis, 209 still on the cards. The time length of that perhaps is changing. We do have evidence of that because the cycle is having demonstrable real cues of differences now. So it might be 209, not necessarily at the end of this year or October or something like this, but it might be, maybe even the end of next year of 2026 as we continue to get this stair stepping up. That's a minimum target. Long term, maybe it even goes absolutely crazy. Maybe we get one of those 300s, which would be absolutely awesome. I think many people would be very happy about that. But then again, I mean, Bitcoin's above 100 and still people are miserable, apparently. Yeah, it seems, and then of course, corrective targets. If Bitcoin were to correct, big levels to watch, obviously 112. I 100% agree with that one. And then of course you have about 95-ish to low 90s, depending upon how high Bitcoin gets before correcting. And the key level right now is still that 112. As long as that low holds, still generally just looking for some sideways and up, basically.
Yep. Sounds right. Yep. And right now, the timing for the 209 at the end of this year is still in play, but it can be pushed into that first quarter a little bit later too. So I'm still in the camp that 209 hits by the end of the year at this point. Now, if we go down, if we break the 111 or the 112 now on the downside, and we break that to go to 95, then I think that will be extended. That 209 would be extended out until probably the first quarter of 26.
Hell yeah. So, I love it. I know you have a time constraint today, but thank you for joining as always. Of course, Swanny's links will be in the description below. Definitely check them out. And we'll have you on whenever you're ready next time.
All right, man. Thanks for having me. It was good times.
Indeed.